I analysed 1,500 charts every day. After close, every single day, 2 hours of studying charts, and I still lost money. It's not because I didn't understand the concepts. I'd read Jesse Livermore, William O'Neill, Thomas Volkowski, Steve Nissen, Van Tharp, dozens of trading books, but I'm still losing money. I lost money because I was buying at the tops. Almost every single time. I'd see the setup, I'd buy the breakout, I'd enter, and then watch my capital erode away and turn into losses. Meanwhile, the experienced traders on the desks, they were trading the same companies, but they had profits. What was it that they were doing differently? What could they see that I just simply couldn't? How could they differentiate it and trade to make a profit in the same company that I was losing money on? It's when they were looking at, when they were buying in the cycle. And this one change, well, it changed everything for me. It progressed my trading career, and it was the first step that really helped power it on. Over the next 5 videos, I'm going to cover the 5 key hurdles that were holding back my personal trading and also held back thousands of momentum traders that I've worked with over the years. The first video, why do I keep buying at the top and how do I avoid that? The second video, why are others able to trade the same stocks and make money, but not me? The third video, why I missed every breakout and I was buying just too late. The fourth video, why I was mentally exhausted by 8 a.m. and that has huge impacts on trading profitability. The fifth video, why I froze when I was trading. I had a fear of missing out that was constantly lingering. When I was in my trade, I was always trying to do something better. I would second guess my system. How do I overcome that lack of confidence to then trade calmly and confidently? Each of these videos solves a problem that has helped me and many other traders along the road. So let's start off with how we got there. How did I get to studying 1,500 charts every single day? And it's important to know that yes, there is a disclaimer. This is not advice. This is not personalized advice. Go and get that. This is educational content. It works for me. Hopefully it works for you, but it's not advice. Now, the question of where to start. Many people have the same issues. They're buying too late. They're whipsawed. They stop out too early. It's the wrong setups in the right market. Always changing their systems, and there's excessive brokerage and tuition costs. I've done all of it. So those 1,500 charts, well, it all started off when I was 18. Like many of us, we just want to get involved in the markets. I started stockbroking at 18 and was hungry to learn everything I possibly could. When I'd go home at the end of the day, if I hadn't learnt something new to write in my journal, I would make the other traders there give me a lesson, dig up something, find something from a book or some obscure economic concept so that I could learn it and go study it, walking away with increased knowledge. Maybe we didn't all start that way, but we all tend to start our trading in a similar way. We're buying too late, we're getting whipsawed and stopped out too early, we're trading the wrong setups in the right market, we're always changing our systems, and we get excessive brokerage and market tuition costs. I did very much the same thing. I tried it all. I'd started with day trading, I was arbitrage, options, warrants, IPOs. I even raised money for Fortescue Metals at 5 cents and tried things like pairs trading. But what I did notice is that the best traders on the desk, the ones who consistently made money, what they did is they stuck to their niche. So they didn't chop and change like I had and like what most retail clients had. They always wanted to try the next hot thing. The best traders don't do that. They just stay in their lane and trade their edge. First, we've got to identify our edge. Hopefully these videos can help us identify that. What I wanted to do though was replace that income. Now, another common goal for a lot of traders and novice traders and new traders is that they want to supplement their income to eventually replace it. And I had the same goal. I wanted to be doing exactly that same thing. And it didn't seem like a far-fetched concept because here I was at 18, still at uni, working in stockbroking, and I could see these other people, these traders, they'd done that successfully. So surely I could just apply myself and I could do the same thing. It's not as clear cut and straightforward, especially when there's not a mapped out path like university courses to work through. So I did want to join those profitable traders. I wanted to make money from trading my own capital, not from brokerage. And that's exactly what the best traders did do. They made so much money trading their own capital, they rarely even spoke to clients. I figured I could do the same thing too. That's how I'd be consistently profitable. I'd take it treat it like a job, just like they did. There are a fair few nuances that I didn't discover, and hopefully we'll address those together. Those nuances can help us become financially independent. So what does it look like when you're analysing 1,500 charts every single day? You're really looking for something like this, but you want drone shield at this part of the phase or this part of the phase. However, I'm scanning all the companies, highlighting them, creating my list after list after list, like all momentum traders do in the early stages. And then I'm buying up here around this green area. Well, it turns out to be a terrible thing to do, like a lot of novice traders do, and then it falls away, and I'm fearful about actually triggering my stop and watching my capital erode. Buying late, watching them fall away, holding on for too long, and then chopping up with maybe trading a bit more along the way where I really shouldn't have. This is what the charts can look like, but we want to identify the top ones. It's quite exhausting to do, but we got to trawl through a lot of charts. So the more that I end up trading and analyzing and doing both repeatedly, I find that the companies that I'm trading can be similar to what the best traders are trading, but they're able to capture a profit and a large portion of the move, and I'm barely getting a profit. I'm getting stopped out, I'm getting churned, and I'm feeling like I'm completely cursed. It's really demoralizing. You're in the same environment, you can touch and feel the other traders because it's not some other foreign concept, it's right there in front of you. And I'm just completely failing time and time again. That's not a fun feeling, and it does feel like a curse. But that did come a turning point. As I was reading a lot of books, there was one trader on the desk who recommended this great book to me. Now, it had been written a few decades before, so I did question its relevance, but it is extremely relevant, and this man, Stan Weinstein, is still giving great interviews today. This is a great book, and it changed so much for me, and this really led the path for me to improve significantly as trading and come to that calm and confident trading. What is it about the cycles that he taught me? What is it that this book taught me? Okay, well, there's stages. It's helping you know where to buy in that stage. So where to buy? Well, first we need to understand what the stages are. Here are the 4 stages. So there's basing area, advancing phase, the top area, and the declining phase as Stan Weinstein defines them. Stan Weinstein says, one glance is worth 1,000 words. So what are these words and what does it look like when we really have a look at an example? We've got Fisher and Paykel Health here. The orange area is going to be that basing phase. That's stage 1. The green is the advancing. That's really where we want to be participating. Obviously, as the chart is rising significantly, that's where we want to be invested in trading. The blue area, that's topping, that's alarm bells. And the red area, the pink, we just stand aside. We do not want to be participating on the long side of the market there. Seems pretty straightforward. So what are the telltales of when we get into these individual phases? Stage 1, the base building. Quite important. What we're seeing is the tug of war between the bulls and the bear is coming to a bit of a flat line. We often see volume diminishing, and importantly, we see certain characteristics within the moving averages. The moving averages, these are highlighted with these solid lines going across the page. We've got blue, we've got green, and we've got red. The blue's the 10-day, the green's the 50, the red's the 200. You can use different variations over different time periods depending on what you're trading, but the concept still remains. What we're seeing in this area of the market is we're seeing price consolidating. It's slowing down, and quite often we're seeing volume diminishing. As you can see here in this part of the chart, the volume has really slowed down significantly, much lower than previous stages. The moving averages, they're stacked. They're sort of compressed and very close to each other. So that means that the general movement of that company or the stock has slowed down significantly. This is accumulation phase. Now, stage 2, this is the exciting part, the advancing phase. This is where we want to be spending all of our time. When we're invested as momentum traders, we only want our capital in this part of the market. Different companies work at different stages, so we need to identify it. And to identify it, we need to understand the characteristics that we're going to be looking for. All right, it's going to break out. So drone shield is the example here. It's going to break out over previous resistance. If we have the high as the previous resistance, it's ended up breaking out and pushing through. What's different about when it does here, breaks out in this section, is that we've now got the moving averages stacked. We've got the blue line above the green, above the red. This is rising. This is the advancing phase. What happens within this? Well, it starts to pull back and then find support in these moving averages. So as you can see here, it's bouncing off the red line. It has found support here as it's pulled back. So throughout this 2023 period, it's pulling back and then finding support on it. So it doesn't end up breaching it. It doesn't violate it and go below it. And then as it picks up more speed, it ends up hugging along this 10-week moving average. So what happens is it does break out and then it holds on to this 10-week moving average and conforms to it. It doesn't end up breaching it. It holds it in all the pullbacks. This is a strong advancing phase. For us as momentum traders, the probability of a good trade is strongly in our favor in these advancing phases. So we want to be in here because this is also where the experienced momentum traders spend all their time. Now we need to understand the other stages to identify what to avoid and quite possibly when we've transitioned from stage 2 to stage 3, because we don't want to be in here. We want to take our capital out and find the next opportunity. So what does stage 3 look like? Well, it can be quite choppy. It can go on for quite a long time. So we've got CSL here as an example. We've got a zoom in of the big part of the chart where it's a big, wild and volatile choppy range. We've got huge volume, big swings in share price, 340 down to 260, and then whipping back up to 320. That is a volatile movement. Sure, some people can trade it. Not for me. Probability is not in my favor. Most momentum traders, they will err outside of that. We want the probabilities in our favor, and stage 3 does not give them to us. So below here, we've got a zoom out of it, and you can see that it goes on for years after year after year. This is not a candidate that we want to be trading. It's still in stage 3. It's not viable for us. It's not ticking the boxes, so we let it move on. This is an example to show that it can trawl on for years and years and years. However, there are other examples that are quite the opposite. What we have here is JB Hi-Fi in a topping phase. Now, as we see in this movement, to the left-hand side of JB Hi-Fi, it's advancing and then trading sideways. When it breaks out again, it then trades sideways at a much higher range. Think of it as stairs as you're walking up the stairs. Now, it becomes a problem when the stairs start dipping back down significantly. It breaches the moving averages and becomes a problem. It then kicks in and starts moving up again, so it does have another advancing phase. A second one, we can call it that. But it does mean the best part of that has started to roll over. Then there are other examples where it's even faster. Here we have an example of ASX Boss Energy being an extremely rapid mover. So we're trading a momentum leader here. This is a solid breakout with huge trading opportunities, and we do trade it a lot. So we've got the basing pattern on the left-hand side. We're coming out of the orange component. We've kicked into stage 2, and this is the green one. We're seeing solid trades and a huge uptick. Gets parabolic and then trades sideways. At the time, we don't know. So that's why we've got it as orange and blue. We're not sure whether it's a topping formation and about to roll back over. We've now got some lower highs getting in place, but we also have higher lows coming in place. So this can be quite confusing. We don't know which way it's going to go. It could be one or the other, but it stays in our short list. Why? Because these moving averages are starting to chop over each other. They do actually create another formation. We'll cover these in more detail in later videos because there are ways to differentiate it. But for this stage, it's worth noting that we can't always tell, so we can keep a company on the short list until it proves that it's in stage 2 again. You may ask, how do we know when it actually ends? Well, there's not much churn time here because Stan Weinstein says there should be some churn in the market like we saw with CSL, a bit less with JB Hi-Fi. We're definitely seeing not much churn time at all, this blue component. When we don't see much of a transition happening, it can be hard to trade, which is why we need to have specific system setups to trade these momentum leaders. Again, we'll cover that in more detail, but it is to highlight we can't always tell when it turns. So understanding the stages is important, but managing risk management, we'll cover that later. Here's another example of some fast turns. A lot of people traded Drone Shield, and we definitely did cover it a lot over the last couple of years in our weekly videos. Stage 1, okay, we've got the basing formation in the orange component, highlighted orange. The green arrows highlight the optimal time to trade them. Well, that's where we're looking at the launch pad and other things we cover each week. The green is where we really want to be trading. Okay, that's stage 2. That's what we want. But critically, there is no churn time. There is really no indication here that we see in Stan Weinstein stages to tell us that a momentum leader, a market leader, the absolute beast and monster stock on the ASX at the time, has rolled over. We've very little early indication in the sense of Stan Weinstein stages. So this underscores the importance. Yes, for the best trades, we want stage 2. But we also need to be wary that stage 3 may not last for very long at all to tell us we've entered stage 4. So this is a stage analysis, and this is where I was getting it wrong. There are some indicators later. So the question comes up, how do I identify the difference between them? Well, it comes up with experience and training the charting eye. Now, it's one thing to understand the concept intellectually, but to identify it in real time is a very different concept. So we consistently need to be refreshing and going through those charts like the 1500 that I was every single day to imprint it in the back of our brain. That's what we call the charting eye gym. There's a whole playlist of videos just like this of market leaders so that we can familiarize ourselves with it to make it second nature to notice it. You can click on the link below. There's a whole playlist there. But we still have the problem of when we understand these phases, I'm still losing money. In the market, I'm still not profitable. So I understand these cycles. I understand they can be fast or slow in the transition, but I'm still getting whipsawed. I'm buying. I think I'm buying stage 2, but I'm still getting chopped up and churned in brokerage. I'm definitely buying late. I'm still watching profits drift away from me and fall away with my capital. So I come up with 3 checks that really do help me take my trading to the next level. Click on the video over here, and what we'll do is I'll see you there to walk through those 3 steps.